Welcome to this edition of the Capital Brief. I'm Seth Berenzweig here in our studios in lovely downtown Tysons, Virginia, here with my colleague, John Tamny. One of the things that strikes me the most about the inflation discussion is that whenever I turn on the television and I'm trying to really understand and dig into the meat of what is inflation to understand whether it's here or to what degree it is or is not, it's almost like listening to people in mainstream media talk about the selective aspects of certain important topics. So, for example, there's a huge conversation to be had in crypto, but all I hear on television is Bitcoin and Dogecoin. I don't hear anything else. When I hear about inflation, I hear different kinds of measures. And you're talking about CPI, which of course is a relevant topic. I've heard that the CPI can be interpreted differently, and that maybe there are different bumps in CPI as it relates to supply chain issues. And of course, we're getting out of COVID. There were some major supply chain issues that might have had an impact on CPI. What's your view of the extent to which M2 is a accurate measure as it relates to inflation? My understanding of M2 is one of the measures of the amount of monetary supply that's out in the economy, and that it's spiked quite dramatically. Is that relevant to the conversation, or is there some other aspect of this analysis that as everyday consumers and people in the business community that we're just missing?
Well, it's a great question, and most economists would come on and say, oh, M2 is totally relevant. Mm-hmm. My argument is that M2, if anything, tells you the exact opposite of what people think it's telling you.
Really?
Well, just think about it. If I tell you I want to buy your law firm, I will pay you in either Argentine pesos or Swiss francs. What will you take?
Well, I'd have to look at a conversion chart, but obviously the volume of the currency is relative to the country that the aspect of the forex that you're paying me in.
Yeah, well, you would take francs, and the reason you would is because they're trusted in the marketplace.
Right.
The Argentine peso is so thoroughly devalued over the decades. It's not used as a medium of exchange anymore.
Sure.
And so money circulated, well, good money is circulated. The Swiss franc is the 5th most circulated currency in the world. Mm-hmm. Switzerland's got a smaller population than does Argentina, yet the Swiss franc is a global currency. The dollar is used in just about every global exchange in existence. If you go into North Korea right now and you want to buy actual goods and services, you will use dollars. Mm-hmm. Venezuela use dollars, and Iran you will use dollars. And so a currency that's trusted is going to be heavily supplied. A currency that no one trusts will be hard to find. In Germany, after World War I, one of the toughest currencies to find in Germany was the mark because it was so severely devalued. And so I think M2, if anything, suggests there's more trust in the dollar, that it's not in free fall as much as people think.
I have to say, I'm very intrigued by what you just said, and I have not heard anybody use that theory, which I think is very credible, because if you don't have strong M2, then you could have an argument that it's a currency that's not predominantly in use to help drive economic recovery to begin with. So I actually love that argument. The M2 situation, if you will, where you've got spiking supply, really folds into what's happening with our good friends on Capitol Hill, and we know how much we love and trust our friends on the Hill to do the right or wrong thing. We have trillions of dollars in economic stimulus that have been passed over the last couple of weeks. It's been in the headlines. We've had trillions. With infrastructure, we'll have trillions more. There's been a lot of conversation that if you continue to, quote unquote, print money and continue to throw money out there, that's going to be more dollars chasing goods and services, and that the Larry Sumner's argument is, the welcome to the apocalypse, because gas is going to be $10 a gallon, so forth and so on. Do you think that there's any merit to that argument, or do you think that they're just completely falling off the train in terms of the analysis.
I think it's poor analysis. It's not that they're printing money; they're just redistributing money.
Okay.
There's no new demand from this. There's just shifting money from one set of pockets to another. And it's the idea that that alone is going to drive up the price of anything. Now, to be clear, some people will say, well, a lot of these people who weren't consumers before suddenly have $1,200 in their pocket that they didn't have. They've got this, and so they're going into the market and
They're
they're
going to go
buying
shopping.
goods.
Right.
Yeah, they're going to go shopping.
Right.
And prices are going up. Look at hotel rooms. Look at airplane tickets. They're going up as demand goes up.
Sure.
That is not inflation. Think about it. What if they decide, if they report tomorrow that eating one Honeycrisp apple a day every day for a year will relieve you of any sort of cancer problems in the future?
Right.
Well, you can bet that demand for Honeycrisps is going to soar substantially. Okay, but because we're paying more for those apples, we're going to have fewer dollars to demand for other things. A rise in a market economy, a rise in the price of some goods and services implies a commensurate fall somewhere else.
Right.
Inflation is a policy choice. It is currency devaluation. To blame rising prices on inflation is like blaming rain on wet sidewalks. You know, it's reversing causation.
Right.
You know?
Right. Well, what you're pointing out, which I think is helpful to the viewers, is it's a complex issue. It's not something that can be lightly touched upon and just glossed over. When you talk about what is inflation, and obviously this is a critical issue to just about everybody. How much is it going to cost to put food on the table? How much is it going to cost to put gas in my car? How much is it going to cost to be able to take my family to the movies? How much is it going to cost to be able to get lumber into a house, such that in the DC area, you have huge price inflation with houses. We're seeing easily a dozen offers for on average for a house that goes well above the asking price. But the point that you're making is that there are so many other granular factors that go into this that you can't just make a generic statement with respect to inflation. You have to take into account the relative price action for other goods and services. You also have to take into account inflation or deflation for other relevant factors. So, for example, compensation, salary. Maybe we could have a salary inflation. We seem to have a labor shortage in this country in a lot of different aspects. So the isn't the purchasing power of the consumer something that should be folded into the analysis of what the actual measure of inflation is on a day-to-day basis?
Maybe, but I think the problem with that is it presumes that if it's falling, oh, we're doing a good job with the dollar. Let's look at the supercomputers that we call phones in our pocket. If you purchased what we had, assuming the technology existed 20 years ago for the kind of phones we have today, it would have cost, by a reasonable analysis, $15, $20 million. And so now we get these supercomputers for next to nothing. Deflation? No, just to enhance productivity. Compare that. What did you pay for a Wall Street Journal in the year 2000 compared to today? What did you pay for a New York Times compared to today? What did you pay for the dress shirt you're wearing in the year 2000 versus today? Prices rise and they fall. That's how a market economy organizes itself. And so when we start thinking about, well, housing's more expensive in Washington, D.C., yeah, there's a lot of rich people in Washington and D.C. Right. Is that inflation, or is that there's specific demand here? Because I guarantee you in East St. Louis, you could get a lot more house than you could get here. Is that deflation there? No.
Right.
And so the focus, I think the problem is that we do overcomplicate it. We look for baskets and say, does this mean there's inflation? Historically, we didn't have to discuss this. If Adam Smith were sitting here right now, he'd say, wait, you're talking about inflation? The sole use of money is to circulate consumable goods. It's just a measure.
Right.
Historically, you didn't need to measure inflation because money had a defined value.
Right.
And from there, prices would just move around. we've now so bastardized it. Nowadays most economists say that inflation is caused by too much economic growth. I can't think of a more absurd definition,
Right.
but that's how economists define it. We've gotten away. We've made complicated what plainly is not.
Yeah, and so what are you going to argue against economic growth? I mean, it just becomes absurd. A lot of the analysis also that is being in the noise out there also appears to not factor in the efficiency, the commercial efficiency of technology. I remember when I bought. And I'm starting to get older than I want to admit, but there was a good number of years ago where mobile phones just started to come out, and I bought what was then called a bag phone. And aside from the fact that it looked absolutely ridiculous, I just looked like I was carrying a dysfunctional piece of luggage with a stupid antenna coming out of it. It was pretty expensive. I can go out today to an Apple store if I want to, and I can buy a phone that they tell me has more computing power than some of the NASA spaceships that have flown to the moon, and they're not cheap, but you get a lot of technology, and there's a lot of price compression with a lot of competition out there. So what's the factor of the healthy competition within the economy from a technology perspective? Is that something that's being accurately incorporated into the analysis, or is that just one of the other things that just falls to the wayside?
Well, you're hitting on an essential point, and it's part of the argument that I always make. Okay, the phone that you talk about, so the first
Right.
Motorola wireless in 1983, the StarTAC, was $3,995, brick-size phone, half-hour
Right.
battery life, terrible reception.
Right.
And then you look at what we have today. Xerox's first laser printer in 1982 was $17,000. The first ballpoint pen was $15. Nowadays, you can get 60 of these in a box from Amazon for quite literally $7.
Right.
What cannot be stressed enough is that the surest sign of economic growth is not rising prices, as economists say, it's falling prices.
Right.
Because what drives economic growth? It's not consumption. Consumption is the consequence of our growth. We produce and then we're able to consume. Investment drives economic growth. What is investment? It is the path toward getting more productivity out of machines and people than you were getting before, as in getting more for less.
Right.
And so as you described, a bag phone, now you've got a supercomputer that you use that you call a phone. You insult your phone by calling it a phone. It's so much more. It's got more computing power than NASA and all that. And so economic growth is about falling prices.
Right.
But if you pick up the newspaper today, economists, and when you read the Wall Street Journal, they'll say, will the economy overheat? Will we be growing so fast that prices will rise? Oh, no, they get it backwards.
Right.
It's the opposite.
We need to have a more comprehensive, intelligent conversation in this country about inflation. We need to have better leadership from Washington and, frankly, from the mainstream media on what is inflation, what are the impacts, and what's relevant to the conversation. A couple of quick data points. M2 has accelerated significantly over the last 18 months, but again, we've talked about that in the broader perspective. When you talk about inflation, and there are people that are really panicking in a lot of these interviews that you're seeing on television, it also doesn't factor in salary inflation. It doesn't factor in the relative strength of the stock market. Over the last 70 years, stocks, as an average, have returned over 10%, but historically, inflation has run under 3%. So, you know, it's concerning to me about the lack of an intelligent conversation on what is inflation, because there are a lot of important decisions that are being made in Washington right now, especially during a time where we're having a lot of economic activity, we're having a lot of stimulus, and there needs to be a more specific, a more intelligent conversation of what that is. Bringing this conversation into a close, my last question for you is, where do you think we're going in terms of inflation? And what I mean by that is, what real impact towards the latter part of 2021 do you see, if at all, as to any relevant role of inflation? And what do you think the average American should look at as a relevant factor to really have a better understanding about what, if any, presence there is to inflation over the rest of this year?
Well, it's a great question, and I'll answer it by saying that if we or Washington or the policy world more broadly is not going to have the discussion, the markets are having this discussion on a daily basis. And how we know this is there's 5 trillion worth of currency trading on a daily basis. Why is that? There didn't used to be this. In the 1960s, currency markets didn't exist. This is the marketplace saying we are looking for stability that we no longer get from fiat currencies. And so that discussion is happening, and you can't separate it from something we've discussed before, the cryptocurrency revolution.
You got it.
Do I think that Bitcoin is a good currency? No, I don't think any currency that it keeps rising in value and falling in value rates as money. But what I think is happening here is precisely because there has not been a good monetary discussion for decades, private money and capitalism, the profit motive, is going to produce what you and I have been talking about on this show, that a good currency, a non-inflationary currency, is one that holds its value throughout time. My sense is that's where we're heading.
Listen, you again have raised a fascinating question. What is currency? What is money? China is pursuing, as we've talked about before, the digitized yuan. China has taken some aggressive postures over the last couple of days relative to cryptocurrency. And that's been a very volatile aspect of the market too. So we're living in such a dynamic age right now that on a day-to-day basis, we're literally redefining and assessing what is currency, and in what form it takes, and how we're literally going to be able to exchange that when we're buying goods and services. John, this has been another really fascinating conversation. These are the deep dives that I think really matter, and really looking forward to the next one. Thanks so much for swinging by today.
Thanks for having me.